Hello, my name is Mano Inti. I am a chartered accountant. Today, I want to teach you accounting not from theory, but from real-life accounting experience as an account officer. I will give you tips that will take you to the aha moment. I will teach you everything you need to know to become a successful account officer or student. It is going to be fun. Join me now. Now, today's lesson. Today, I am going to introduce you to accounting. Accounting is a necessity in every entity, regardless of the type or size. It is so important that the full-time international body, the International Accounting Standards Board, representing accounting experts from several countries, exists to provide guidance on how to account for items and transactions and how to communicate this information. Yes, accountants are communicators. Accountancy is the act of communicating financial information about a business entity to users, such as shareholders and managers. The communication is generally in the form of financial statements that show in money terms the economic resources under the control of management. Why is accounting important? Accounting plays a vital role in running a business because it helps you track income and expenditures, ensure statutory compliance, and it also provides investors, managers, and government with quantitative financial information which can be used in making business decisions. What then is accounting? Accounting is the process of identifying, measuring, recording, and communicating economic information about an organization in order to permit informed judgments by the users of the information. The end result of accounting is providing financial statements for the users to make decisions. Now, let's go through the process in getting the financial information. Number one, identify. This is where you identify that the transaction has occurred. For an example, in a chocolate manufacturing company, a purchase of cocoa beans as a raw material is a transaction and needs to be treated as such. Number two, measure. This is where you measure the transaction in monetary terms. For example, the cocoa beans were purchased at $500,000. Number three, then you record. This is where you ensure that all business transactions that are quantified in monetary terms are recorded in an orderly manner. The recording is done in a journal. Therefore, the purchase of the cocoa beans will be recorded in the books as a purchase of raw materials for the value $500,000. Number four, you classify. This is where you analyze the recorded data with a view to group transactions or entries of one nature at one place. Here, a ledger is created. Number five, you summarize. This is where you present the classified data in a manner which is understandable and useful to the internal and external end users of accounting statements. This process leads to the preparation of the trial balance, the income statement, and the balance sheet. This will contain all the transactions that has happened or occurred in the financial year. 6. Then you analyze. The recorded financial data is analyzed and interpreted in a manner that will enable the end users to make a meaningful judgment about the finance condition and profitability of the business operations. This is the final function of accounting. For an example, the purchase manager will pick the trial balance or the financial statement and analyze all purchases made. Number 8. The purchase manager, after analyzing, is going to interpret the financial information. An example, he is going to interpret that The cost of the raw material, that is the cocoa beans, are very expensive, and there are other cheaper alternatives elsewhere. Lastly, communicate. The accounting information, after being analyzed and interpreted, has to be communicated in a proper form and manner to the appropriate persons. This is done through preparation and distribution of financial reports such as the income statement, balance sheet, cash flow statement, and director's report, and so on. For example, the purchase manager is going to communicate to the shareholders that the purchase of the raw material, that is the cocoa beans, were very expensive. Therefore, in the future, they should look for other sources of raw material. Accounting provides for the assembling of economic data and the communication of these data to different individuals and institutions. We have the internal users and the external users. Let's go through the internal users. Number 1, business managers. Management needs accounting information in order to perform their function very well. The day-to-day information about all aspects of the business and of the outside within which the business operates is needed by management. Up-to-date information on how much and to whom money is owed, how much and by whom money is owed to the business, and the cash balance at bank and in hand, as well as a summary of how much profit or losses the business has made in each year, and capital employed in the business are some of the information needed by management in order to perform its functions very well. Number 2, the owners. The owners or shareholders. The owners of the business may need the accounts to measure the performance of the business. This would enable them to decide whether to continue business, expand, or liquidate it. In the case of shareholders, they are also concerned with the value of shares and the dividend paid to them. Employees. The employees are interested in the business relationship with employees of the firm, such as work requirements, hours of work, pay holidays, etc. The ability of the firm to survive and to pay higher wages is also dear to their heart. Now, let's look at the external users. We have investors. These are people who provide risk capital into the company. They need the financial information to keep track of return on investment and associated risk. Lenders, such as the bank, they use accounting information to measure management performance in order to inform the bank management whether to lend money initially as well as to continue lending or to reduce or to stop. The government, public authorities such as the tax authorities, standards boards, etc. are interested in data relating to earnings, PAYE, that is the pay as you earn, the VAT, value added tax, corporate tax, employment, and production. They need the information to assess whether the company is not violating any taxation, labor, or corporate laws. There are also research agencies. Accounting information is used by the research agencies in their research in accounting theory as well as business affairs and practices. Creditors. These are people who supply items to the company on credit. They are interested in the ability of the business to pay its debts as well as how long it takes to do that. Also, whether it is likely for the firm to stay in business for a long time and at what credit limit should be given to the firm.